Good morning and thanks for joining us on today's business. I am Tolu Ajibola. It's a big relief as the leadership of United Labour Congress has resolved to suspend a two-day-old nationwide strike as a result of fruitful negotiations with the federal government. ULC, a breakaway from the NLC, controls a critical sector of the economy, including oil and gas, electricity, aviation and banks. It had declared the strike on Monday to protest its now recognition by the federal government and a review of the privatization of PHCN, among other demands. A strike had raised anxiety among Nigerians who feared a downtooling in any sector could jeopardize a fledgling economy struggling to come out of recession. In the meantime, the Nigerian Customs Service says it has impounded 18 exotic vehicles suspected to have been smuggled into the country. Vehicles which were displayed by the service are all in Abuja. 13 of these vehicles are bulletproof with a minimum street value of over 70 million naira each. According to the Customs Controller General, Colonel Hamed Ali, some of these vehicles actually cost about $500 million naira each.
This is a 2018 brand new Rolls-Royce vehicle. It is allegedly sold for 450 million naira. 70% of its cost was to be paid as import duty to the federal government, as at the time it was imported. However, this vehicle is with the Nigeria Customs Service today because Kefiana Motors Limited, the car dealer who was in possession of this vehicle, could not produce authentic documents to prove that it was not smuggled into the country. This is one among 18 other vehicles displayed by the service.
With the documents before us today, on these vehicles, we do not have end-user certificates and we do not have duly paid duty, custom duty on these vehicles. That end-user certificate is only granted by the office of the NSA.
The service had in March 2017 given a grace period and 40% of the import duty fee to owners and sellers of vehicles not older than 7 years the opportunity to possess genuine papers. The customs boss once again warned vehicle buyers to ensure that genuine clearance documents are gotten, as the service will increase its anti-smuggling operations.
Sections 147 of our SEMA, that's the Customs and Excise Management Act, gives us the right to go after smuggled items. If you are found in possession of smuggled items, you will be prosecuted and it's 1 year jail term, no option.
In the last 2 months, the service has seized 265 smuggled vehicles across the country.
Away from Abuja to Lagos, where the Customs Service Controller General is about now at the Tin Can port to either deny or confirm the news that the service has again impounded another cache of 475 pump-action rifles. This comes barely 1 week after the seizure of 1,100 high-caliber pump-action rifles at the same port. The latest haul, also suspected to be imported from Turkey, is believed to belong to the owner of the container with the 1,100 rifles. If confirmed, it will be the 4th time this year that the service will be intercepting firearms from Turkey. To the financial sector now, where some directors of banks and other financial institutions have made some projections ahead of the forthcoming CBN Monetary Policy Committee meeting scheduled for the 26th and 27th of this month. According to those who spoke to us, it is anticipated that the committee will sustain monetary indices which brought the improvement in the domestic economy and the recovery from recession.
The inflation rate at the moment is 16.01, as the National Bureau of Statistics have just given. You would expect that there should be some kind of adjustment in the MPR, because at the moment at 14%, which has been trending for quite some time now, I think it's also affecting, being a benchmark rate, is also affecting all the other rates in the industry. The cash reserve ratio it should really come down. I think at 22% currently is having great difficulty for the banks to manage their liquidity. So if the cash reserve ratio can come down, it will be good to allow the banks some more money to lend to the private sectors.
And Governor of Central Bank of Nigeria, Godwin Emefiele, says the CBN is coming tougher on enforcing appropriate penalty regime on internal functions and competency framework of banks and other financial institutions. He said this is aimed at strengthening compliance to Code of Corporate Governance practices and ensure protection of funds of depositors, which must come first. He made this submission while speaking at the 2017 CBN FITC Continuous Education Program for directors in banks and other financial institutions.
It is a training session with directors of banks and other financial institutions to address the gaps the recession has brought to bear, the impact of weak corporate governance practices, failings of the Nigerian financial system, and its stability.
Corporate governance is undoubtedly an essential pillar in financial system stability. It encompasses the protection of minority shareholders, disclosure provisions, the role and structure of the boards, complexity on the definition of related parties, compensation structures, and much more. In essence, whereas strong governance practices helps to strengthen its strategic health, weak corporate governance would normally undermine financial system stability by heightening the vulnerability of financial institutions to external shocks.
The CBN Governor Godwin Emefiele says the body is becoming more stringent in ensuring compliance to the codes of corporate governance practices, especially to protect depositors' funds.
Independent directors must remain independent and perform their roles and responsibilities, no matter how tough it is, to be able to look at insiders who are shareholders of those institutions and tell them what is true and what is not right. And yes, we are going to get tough because it's a dynamic environment, and we still see cases of insiders, some insider abuses, and the central bank is currently looking at a few, and we will continue to take drastic actions against those insiders. So we want to make sure that banks remain strong by ensuring that strong governance practices. It's about also checking your conscience to tell yourself, have you performed your role creditably in a way that you are seen not only as serving your own interest as shareholders, but also serving the interest of a larger stakeholder, in this case the depositor. Those are some of the issues we'll be looking at going forward, because those depositors are very important, and we see them truly as the owners of those banks and not the core shareholders.
Beyond policies and guidance, expertise of proposed directors must be reviewed for improved transparency and efficiency.
There seems to be a lot of weight about only independent directors looking out for the interest of depositors, and I have seen where not necessarily do those independent directors have the proficiencies needed to chair committees. So, well, what Central Bank could do is, in the first place, to ensure that independent directors have the requisite proficiencies for the kind of audit committees, board committees that they would have to chair.
The CBN governor stated that assessments to ensure compliance will be taken up by the Corporate Governance Scorecard, an initiative for internal audits to further help cushion financial shocks banks may face, among other challenges that poor management may bring.
To throw more light on the issue of corporate governance, I have with me in the studio the Managing Director, Financial Institution Training Center, Lucy Newman. Thank you for joining us.
Thank you for the invitation,
Yes, you're welcome. So the subjects of discussion is corporate governance now. Why has the FITC decided to focus on it at this time?
Okay, for FITC, corporate governance has been an ongoing subject, because we actually see corporate governance not as a destination, but as a journey. And as the system gets complex, it's important to sit back, reflect on the successes and failures, and come up with policies that will support the system in the future. So the session was just about an engagement with directors of banks and the regulator, which FITC has been facilitating for the past 33 years. The first session was in 1985, and then in 2006, the CBN started collaborating with FITC. So this edition was the 12th with the CBN. And at the end of the day, we engage each other, we share best practices, and also there's a lot of communication that happens in terms of communiques that go back to the regulator courtesy of FITC. And over the past 12 years, we know that the regulator has paid attention to some of these communiques, and these communiques, some of the recommendations have actually impacted either the review or the initiation of new policies to support the system.
Okay, let me ask you on the level of corporate governance that exists in financial institutions. Now, would you say it's low? How would you rate it? Or are there red lines going back and forth?
Okay, for us to look at that, we need to look at the banks within the financial system. We need to look at the financial system within the wider economy. So looking at the financial system within the wider economy, I'll say the financial services sector has demonstrated over the years best practices, but within the banks themselves, it hasn't been as good as desirable. Otherwise, we won't have the mortality rates of banks. So looking at it, I would say within other sectors, economically, financial services sector, I'll rate it an A.
Okay.
Within the financial services, looking at mortgage, insurance, and co, I'll give banking A++. But within global practices, I'll give us a B, because we still have a lot to do, and we have many institutions failing as a result of failures of corporate governance. Does that mean that all that we have done have been a failure? Certainly not. It's because the system is increasingly getting sophisticated. Products are coming up, and then in terms of board leadership, directors have fixed tenure, some retire, some join, and as they join, they need to be taken on board. So it's a continuous process of iteration and improvement as the system gets complex, as our financial institutions feature in the Global 1000, and as our financial institutions go to other jurisdictions and also play in other markets, it calls for different types of rules and engagements.
Okay, before I take you up on the resolutions at the workshop, you mentioned the best practices. We've had some of the challenges in the financial institution, the non-performing loans. We've had the exit strategy of some of these challenges, that have been going back and forth, and the fact that there was an economic recession.
Yes.
So what is the way forward?
Okay.
Before I now come to the resolution at the workshop.
Thank you. Because of the recession, people's capacity to repay loans taken was reduced because of the capacity to earn and extra cash to pay back on commitments. But also there's another side which came out very strongly in the discussion, which is a situation whereby people that are internal stakeholders of financial institutions take credits from the financial institutions, and when they go bad, it gives the whole group a bad name. Take for instance now, if a bank has share capital of 150 billion and somebody who invested 5 billion and sits on the board of that institution, and the person borrows 20 billion and does not pay back, or the person borrows and gets like a competitive preferred pricing in terms of interest rates. When it goes back, it means the depositor cannot get its funds, it means the bank will not meet its liquidity ratio, the whole thing goes down. So that is part of the issues, non-performing loans. And then when you look deep down, who were the borrowers? Are they customers from outside, or are they internal people? And what kind of businesses do they do? And then why did they fail to pay back? And how can the financial institutions support? Because depositors give banks money to place on trust that when they need such funds, they can withdraw them, or they give their transactions to banks with trust that the bank has capacity to help them in those transactions, and that the transactions will be fruitful, and that the price of those transactions will be fairly priced. So however, when non-performing loans come to be a problem, it means the bank has challenges meeting its liquidity requirements. It means the bank has to borrow higher premium sources to meet those commitments, and the whole thing goes into a spin. And then the bank does not meet the liquidity requirements, and then the license is threatened, and then shareholders lose their money.
All right, let me take you up on the resolutions that were, reached at the workshop. Can you just share some of that here?
Okay. The resolutions are still emerging, because one of the things we do is when we finish the communique, we share it with everybody that was involved.
Okay.
And then everybody confirms that this is our voice, we agree. This happens by emails, and then after, when there's consensus, we now share the views. Okay. So for me to give much detail on that, that will be presumptive, yes. But I can just pick key pillars of some discussions. One of them is the role of the independent director. The independent director is supposed to be somebody who doesn't have shareholding, not appreciable in the system, so that a person can be the conscience of the board that occupies a neutral ground and can be bold enough and have the wisdom to bring everybody to fair practice. So there's an instance whereby we started experimenting with the role of the independent directors, and now we have the senior independent directors. Some banks have 2 or 3, and the regulator is realizing that the role, if that independent director is really empowered and does what is right, probability is that chances are less of some things that go on. And the regulator wants to empower the independent directors so that they will feel comfortable, they're protected, and they understand the responsibility of their role. The other major conclusion was the issue of insider credits. People who sit on boards, are we going to ask that it's important for them to clearly clarify and inform and be transparent, not just about the shareholding in the company, which is accessible, but all other institutions where they're related, and are those institutions customers of the bank, and are those institutions borrowing from the bank, and have they disclosed their interests in those institutions, and are they going to use a position on the bank to get preferred pricing, and if they don't pay back, will they play by the same rules of recovery?
All right, let me take you up on this one. In line with some of these resolutions, how will the depositors feel about this development?
They should feel very happy, because at the end of the day, in fact, the tone of the regulator is, the earlier conception is that the shareholders own the banks. But if you look at the statement of affairs under IFRS or the balance sheet of a bank under GAAP, you will see that the shareholders fund is a micro percentage of the depositors' funds, and it's the depositors that actually provide the funds that run the bank. And therefore, people pay their money into banks which they have earned by way of livelihood. It is unfair for them to want to use such funds, and tomorrow there's a problem. So for the regulator, the depositor owns the bank, and the depositor must be protected. And it goes without saying that since 2010, we have had no incidents whereby depositors lose their funds in financial institutions. And for us, for the financial system, that is a major point of celebration, and that goes to credit of how much regulation has clamped down to protect the regulator from loss of personal funds.
Let me take you up on the last question. How is the center planning to improve corporate governance in financial institutions? I know there have been a lot of back and forth over the years trying to regulate the affairs and the state of financial institutions. So what is the center doing right now to just help regulate corporate governance? It's a big word right now. So what is the center doing?
Okay, FITC is not a regulator. We're not an operator. So we work by moral suasion, persuasion, advisory, and then also encouraging discussions so that it can be a collective view on issues that have been decided. So what we will do is, this is a milestone review where we had the governor personally in the room, we had the deputy governor of financial system stability in the room. The communique is not like any other that we have had, because the theme of the seminar or the conference was the next level of corporate governance practice. So it was a review of how far we've done, where we've messed up, going back to beginning of banking industry. And then at this stage, as the institutions get complex and the issues come up, what kind of regulation do we need going forward? So for FITC, we're happy to play this middle role of advisory, appreciating the challenges of the operators and advising the regulator on what can make ease of operation for the regulators, as well as explaining to the operators why the regulator thinks this should be this way. So for us, we'll be happy to see maybe in the next 1 or 2 years, 1 or 2 regulations
I was going to
come out
to
as
that.
a result of this engagement. That would be a good milestone.
All right, I was even going to come to the timeline of achievement of some of these resolutions, but you've just said it yourself.
Timeline, we don't have control over that.
You don't have control,
timeline.
but yes, just hoping
Yes.
that things will evolve over
There'll be
the
an
next period of years. All right, thank you so much, Managing Director of FITC, Lucy Newman, as she shares with me a couple of her thoughts on corporate governance. We go on a short time out. Today's Business will be back. Okay, now to the stock market. Midweek trading on the floor of the Nigerian Stock Exchange indicates that the all-share index appreciated 1.04% to close 35,207.89 basis points. Market capitalization closed at 12.136 trillion naira. 2,977 deals were traded, valued at 1.34 billion naira. Graphic details. And that's how we end this edition of the program. Thank you for watching. I am Tolu Ajibola.